MCQs, Chapter 6, Strategic Revenue Management. In this topic, we are going to cover CVP analysis, pricing decision, relevant costing. Okay. Voilà. Deva padikriya?
Yes, sir. First one. Assumptions under CVP analysis includes option A, cost can be classified into variable and fixed cost. B, variable cost per unit remain constant. C, selling price remain constant. D, all of the above.
What are all the assumptions?
All of the above.
Cost can be classified into variable and fixed cost, correct? Variable cost per unit remain and of a constant. Selling price per unit remain constant. Therefore, all of the above. Next.
Non-cost factor in make or buy decision includes A, optimum utilization of unused production capacity.
Yes.
B, reliability of uninterrupted supply. C, quality of the product. D, all of the above.
So,
All of the
All of the above.
in all of the above. Yes.
Third one. Differential cost is a tool for A, make or buy decision. B, further processing decision. C, submitting tender. D, all of the above.
Okay.
All of the
above.
All of the above.
Fourth one.
So the differential cost, 11 major areas given in this material. Am I right? You noticed or not?
Fourth one. Factor which at a particular time or over a period will limit the activities of an undertaking. Option A, key factor. B, limiting factor. C, critical factor. D, all of the above.
All of the
All
above.
of the above.
All of the above.
Alternate name only. Key factor is also called limiting factor, also called critical factor.
All of the
Critical factor.
So demand is more, our side resource, available resources is less, means key factor will arise. Understood? So limiting factor to earn more profit. Next.
which is not considered as key factor. Option A, shortage of raw material. B, availability of cash. C, excess time of labor. D, demand.
Labor time excess means that is not a key factor. Limiting factor only
Shortage time of labor.
not considered as a key factor. Shortage of raw material is a key factor. Availability of the cash may be the key factor. Demand may be the key factor. Excess time may not be the key factor. Shortage of labor is called the key factor. Right? But they said excess.
Yes. Excess.
Yes. And not.
Next question. In case of key factor, ranking system is based on A, contribution per unit. B, contribution per hour. C, contribution per key factor. D, net profit.
Contribution per key factor.
Per key factor.
Key factor.
Whenever key factor arises, we have to remember the step. Even that step itself they mention. Identification of key factor. Then compute contribution per key factor. Then rank the product based on contribution per key factor. Allocate the key resources based on the rank. Thereafter, you have to prepare profitability statement, maximum profitability statement. Understood? So contribution per key factor. If the hour is a key factor, contribution per hour you have to identify. Raw material is a key factor, contribution per kg of raw material, per unit of raw material you have to identify like that. Okay. Next.
Seventh one. Before shutdown, we have to consider A, interest of the worker. B, competition. C, depreciation. D, all of the above.
All of the above.
D, all of the above.
Next.
Relevant costing. Costs which are useful for the purpose of decision making are known as A, direct cost. B, controllable cost. C, relevant cost. D, predetermined cost. Relevant cost.
Definition of relevant cost itself. On the basis of decision making, cost can be classified into two types: relevant and irrelevant.
Irrelevant.
For the purpose of decision making are called relevant costs. Costs which are not useful for decision making called Irrelevant.
Irrelevant cost. Which one is not form part of relevant cost?
Always not
Opportunity.
counting with that. Careful. Opportunity cost, sunk cost, incremental cost.
Avoidable fixed cost.
Sunk cost.
Sunk cost.
Cost is not a relevant cost. Next.
These are expected future costs that are essential but differ for alternative course of action. A. Relevant cost. B. Opportunity cost. C. Differential cost. D. Incremental cost.
Differential cost.
Differential cost. Change in cost due to change in level of activity. The differential cost only classified two types. One is incremental and one is decremental cost. Okay, Hannah?
Yes.
Good point.
Fourth one, match it. Situation and relevant cost. Regularly used material. Rarely used material. Rarely used material having alternative use to be purchased. Relevant costs. Buying cost. Highest of opportunity cost. NRV. Current replacement cost.
Regularly used material means current
replacement
cost.
Rarely used material means NRV we can.
NRV.
What is the saleable value that you can? Having alternative use, therefore
Highest cost.
To be purchased by
Buying cost.
Price.
So
Option
A.
Fifth one. Skilled labor as per the payroll are considered as A. Fixed cost, B. Variable cost, C. Committed cost, and D. Relevant cost.
Committed cost.
Committed cost. Irrespective of the reason, we are going to pay because they are in the payroll. Therefore, committed cost. Good.
Sixth one. Supervisor salary, if he spent half of the time for the project, then the relevant cost would be A. Half of the salary, B. Full salary, C. Nil, D. None of the above.
Full salary.
Nil. Not half. Nil. Because supervisor salary is a committed cost again. Understood or not? Whether one project or two projects, he is going to devote his time accordingly, irrespective of the case. Only if there is a overtime or extra worker if I am going to appoint, then only it's become relevant cost. Understood? In preliminary coaching is going on. Okay. Foundational one going on, foundation inter going on, foundation inter final going on. Clear? My supervisor, my admin going to concentrate all. She is going to spare the time, right or not? Because of that, the cost is not going to get affected. If it is the excess time or overtime, or some other premises they are going to conduct one more class, you are going to appoint additional labor, then only become relevant cost. Understood?
Yes, sir.
Like article, whether you are doing one audit or two audit or three audit, your payment remain constant. Therefore, irrelevant for decision making. Therefore, it's a committed cost. Nil amount you have to take. Understood?
Yes, sir.
Common
pitfalls in relevant costing. Common pitfalls in relevant costing. A. All variable costs are relevant. B. All fixed costs are relevant. C. All of the above. D. None of the above.
Pitfalls, okay?
Pitfalls.
Common pitfalls.
A.
All of the above.
All variable costs.
All of the above.
No.
Sir, all
First one.
are irrelevant, right? Irrelevant.
A.
If it is irrelevant, all of the above. Because relevant given. Am I right?
Yes. A.
A is that. Very good. Two common pitfalls are relevant costs, sir. All the variable costs are relevant. All
Relevant.
costs are
Irrelevant.
Therefore, since relevant given in this question, it's not correct. Okay. Good. Next.
The screen.
Just a minute. Next. Hannah, kindly read me.
Pricing decision. Assumptions of the pricing microeconomic theory includes maximize the profit, considering demand and cost function, only one product, all of the above.
All of the above.
All of the above.
All of the above. Next.
General guidelines for the pricing policy does not include
Not include.
Provide an incentive to producer, optimum utilization of resources, balance demand and supply, promote import.
So the answer is what? The guidelines not include.
Promote import.
Promote import may not comes under one guidelines. Right? Provide incentive to producer is correct. Optimal utilization of resources is correct. Balance demand and supply is correct. But promote import may not be correct. So not, they said not include. Underline not include. The guidelines for the price may not for the purpose of what? Import. Understood? Next question.
Pricing under different market structures are monopoly market, monopolistic market, oligopoly market, all of the above.
So all of the above.
All of the above.
Everything will form part of the market structure.
Large number of firms producing similar product but not identical products are known as monopoly market, monopolistic market, oligopoly market, all of the above. Monopolistic.
Monopolistic. Yes. Monopolistic of the monopolistic itself. Good.
Keeping price artificially low and often below the full cost of production are known as limit pricing strategy, predatory pricing, all of the above, none of the above.
Predatory pricing.
Predatory pricing. It is for the purpose of killing the competition.
Competitor. Product differentiation, existence of many sellers and buyers and product differentiation, existence of many sellers and buyers and availability of close substitutes are features of monopoly market, monopolistic market, oligopoly market, perfect competition.
Monopolistic market.
Monopolistic market, yes. Monopolistic market.
If in a market there are few large sellers occupying a major share of the market, this situation is called monopoly, monopolistic market, oligopoly market, perfect competition. Oligopoly.
Oligopoly.
Again, definition of oligopoly. Yes.
Which one is not form part of pricing of finished product? Cost plus pricing, rate of return pricing, variable cost pricing, none of the above.
Answer is everything form part of finished goods product only. Cost plus rate of return, variable cost pricing. Therefore,
none of the above.
None of the
next.
Competitive pricing includes going rate pricing, sealed bid pricing, all of the above, none of the above.
All of the above.
All of the above. Both going rate and no.
So how is sealed bid pricing?
Sealed bid will not comes under competitive. Going rate. Yes. Okay. Going rate is the correct answer. Yes, Ravan.
A firm tries to keep its price at the average level charged in the industry. A, going rate, B, sealed bid, C, all of the above, D, none. A.
Average. So, going rate. Good.
Pricing is based on expectations of how competitors will price. A, going rate, B, sealed bid, C, all of the above, D, none. Again, A.
sealed bid.
Sealed bid. Expectation how competitor will price.
So, but sealed bid is for the contract base, no?
Contract. My component, how they are going to fix the price. Accordingly, I'm going to reduce the price based on relevant costing approach. Therefore, it's purely based on the expectation of how, not going rate, actual price itself, you are going to fix, right or not? We are going to know how much the competitor is going to fixing the price. Here, expectation means sealed bid price, because I may not aware how much they are going to fix the price.
Okay. Value-based pricing.
Sir, அப்போ அதுக்கு 9th MCQ को all of the above answer होगा.
Yeah.
If it is competitors based,
No.
competition based.
Two classifications are there for competition based pricing. One is going rate price, another one is what? Kindly refer the class note. Based on competition, penetrating pricing will be there. Based on pricing policy in the pricing theory, they are classified into two different types. Finished good product price separate classification is there. Competition based separate classification is there. Two types of competitive price pricing given. What are all them? Kindly refer Ganna. The differentiation
Going
of
rate pricing, seal bid pricing.
what? Competition. In competition, competitive price pricing. Kindly refer Ganna. Refer the class notes quickly. Page number. Can I help you?
LMR booklet 233 page number.
என்ன சொல்லிருக்காங்கன்னா
அதுல ஒரு tabular column இருக்கு சார். Type of competitive pricing, going rate pricing, seal bid pricing.
not penetrating for yeah.
இல்ல.
Yes, you are correct. Going rate and sealed bid both comes under what? All of the above is the correct answer then. Am I right? Kindly refer the notes now. Yes, kindly rectify the mistake. Competitive pricing includes both going rate and
Sealed bid.
sealed bid. Okay, fine. Thank you, ma'am. Thank you. Next,
Value.
can you please refer one more time? 11th question.
Pricing is based on expectation of how competitors will price. A. Going rate pricing. B. Sealed bid pricing. C. All of the above. D. None of the above.
Sealed bid price. Okay. Based on expectation of how they are going to, how the competitor is going to fix. Therefore, sealed bid. Next.
Value-based pricing includes true economic value, perceived value, all of the above, none of the above.
Both true economic and perceived value. Value-based pricing.
Cost of next best alternative plus value of performance differential equal to true economic value, perceived value, all of the above, none of the above.
Answer is true economic value. Refer one small sum also given in the class notes for true economic value. Okay, we'll work out also. In case list based question, case study based question, we'll work out true economic time permits. Next.
Price discrimination based on A. Customer, B. Product, C. Place, D. All of the above. D.
All of the above. Four types of price discrimination are the price discriminations are there based on customer, product, place, and time.
Time.
That's all of it.
Market entry pricing strategy includes skimming pricing policy, penetration pricing, all of the above, none of the above.
Okay.
All of the
The
above.
market and the competition. Am I right? So market entry only two different price. Skimming and penetrating.
Penetration.
Thank you, Sudhi. You are correct.
It is a policy of charging high price during the earlier period. Skimming pricing, penetration pricing, all of the above, none of the above. Skimming.
Skimming pricing, charging high price.
It is a policy of using low price. Skimming pricing, penetration pricing, all of the above, none of the above.
Answer is
Penetrating.
Penetration price.
penetration.
Stay out pricing policy known as skimming pricing, penetration pricing, all of the above, none of the above.
Penetration
Stay
pricing.
out, charging least price so that cause them to what? Stay out. Penetration pricing.
Price deduction that systematically make the net price vary according to buyer's position in the chain of distribution is
Chain of distribution. Okay.
distribution.
Hmm.
Price discrimination, price discount and differentiation,
Hmm.
geographical pricing, none of the above. B,
Price
Discount and differentiation.
differentiation. I told about the example of book sales, right? Bulk purchase, library copy, author's copy, differential price, the chain of the distribution channel.
condition to be satisfied for price discrimination includes the
Price discrimination. Hmm.
The maker must be capable of being segmented for price discrimination.
Hmm.
The customer should not be able to resell the product of the segment paying higher price.
Okay.
The chance of competitors underselling in the segment of higher prices should not be possible.
Okay.
All of the above.
Rule of the segment of price. Yes, all of the above. Pricing in cinema theatre is example.
So what does point B means?
Hmm.
Customer should not be able to resell the product.
Same ticket they can't put to sell to higher rate.
Oh,
First class ticket, second class ticket mean customer should aware, right? Same movie only, 100 rupees also we can be in the person to watch, 300 rupees also you can be in the person to watch. After the awareness of the customer, they are going to choose which price they want, which place they want to sit. Accordingly, they have to pay higher rate. We can't sell the 100 rupees to 300 rupees and vice versa. Understood?
yes, sir. Seats in the cinema theater where the front seats are charged at lower rate than back seats is the price discrimination based on A, customer, B, place, C, time, D, product.
B,
Place.
place.
Based on place, yes. They were now rectified. Next.
Giving off-season concession in sale of fans is price discrimination based on customer, place, time, product.
What?
Time.
Time. Yes.
In this pricing, a seller must consider the cost of shipping goods to the buyer. Price discrimination, geographical pricing, all of the above, none of the above.
Geographical pricing.
Geographical pricing, yes.
Pricing principles where non-cost reasons are important includes price discrimination, peak load pricing, all of the above, none of the above. Price A.
All of the above.
Oh.
Non-cost factor. Price discrimination is also based on non-cost factor. And peak load pricing also non-cost factor. In peak load, they are charging high rate, irrespective of the same cost. Same another cinema theatre also they are charging what? Differential rate, irrespective of the same cost of showing the same. So cost alone is not the criteria. Some other factor based on that they are charging. Therefore, price discrimination, the peak load pricing will come under non-cost factor based price. Okay.
The pricing system is based on capacity contains price discrimination, peak load pricing, all of the above, none of the above.
What is the answer?
Peak load pricing.
Yes. Capacity constraint is peak load pricing. Sudhi Padra.
It occurs when a firm with sufficient market power sets price at a sufficient low level with the purpose of damaging or forcing a competitor to withdraw from the market. Option A, peak load. peak load pricing, B, predatory pricing, C, shadow pricing, D, penetration pricing.
Answer.
Predatory pricing.
Predatory pricing. Low alone is not the criteria. Low and we want to damage or kill the competitor. Combined condition. Understood? Mere low means just you want to enter. But the intention behind low to kill the competition is predatory price. Understood? Predator, you know the definition of the predator. Lion and deer. For the purpose of survival, lion is going to kill the deer. For the purpose of survival, they are going to fix the price to kill the competitor. That's why it's called predatory pricing policy. Understood?
Yes,
In
sir.
case study based question, they may going to frame combine together, or with me or not. Company XYZ Limited producing product A, B, C, D, different market. For A, this type of pricing they follow. B, this type you have to identify. Company follow for A, what type of pricing B. They will give the options. Understood? So they're going to combine also. Or with me? Next.
It increases in value, which should be created by having available additional unit of limiting sources at its original cost. Option A, peak load pricing, B, predatory pricing, C, shadow pricing, D, penetration pricing.
Additional limiting resource comes under it increase the in value. Shadow pricing.
Shadow pricing.
We are going to add the opportunity cost concept, shadow pricing.
As per economic theory of pricing, profit is maximum at level of output where marginal revenue is equal to dash. Marginal cost, marginal revenue, total cost, sales revenue.
So MR is equal to what kana?
Marginal
MC.
cost.
Marginal cost.
MR is equal to MC. Marginal cost.
Price where profit is maximum in P is equal to A minus BQ, P is equal to A minus 2BQ, all of the above, none of the above.
Pricing in economic theory. P is equal to what?
A minus 2BQ.
A minus 2BQ or A minus BQ?
2BQ.
Kindly refer the theory. MR is equal to P is equal to another theory. Is there? Kindly refer.
A minus BQ.
So maximum profit at maximum at what? P is equal to page number. Class notes PDF itself is available. Or LMR policy.
The basic price equation P equal to A minus BQ, marginal revenue under A minus 2BQ.
So price at maximum is
A minus BQ.
BQ. The next one, as per economic theory of pricing, MR is equal to P. In that juncture, P is equal to
2BQ.
2BQ. We'll do on sum also based on.
As per pricing policy, way to arrive right price is price customization, price sensitivity, all of the above, none of the above.
The answer is
All of the above.
all of
All
them.
of the above. Fixing price of the firm based on memory capacity like 16 GB, 32 GB, etc. will come under what type of price customization? Option A, time differential, B, demographic, C, customer behavior, D, product line.
D.
Customer behavior.
It's purely based on product line. 1 GB, 2 GB, 2 GB, purely based on what? Product line. Yes.
Railway fare concession for senior citizen or military personnel will come under what type of price customization? A, time differential, B, demographic, C, customer behavior, D, product line.
B. Demographic.
The demographic.
Factors that contribute to price sensitivity is option A, unit value effect, B, substitute awareness effect, C, difficult comparison effect, D, all of the above.
Price sensitivity, unit value also, unique, not
All
unique,
of the
unique
above.
value. It's not a unit value, unique value.
Unique value.
Yeah. So the answer is
All.
All of the
all of
above.
the above. Yeah.
If buyers are aware of substitute, then price sensitivity will be dash. High, low, moderate, none of the above.
High.
High.
High. Just a minute. Next.
If expenditure on the product is low proportion of the customer's income, then the price sensitivity will be dash. High, low, moderate, none of the above.
Low.
Low. The bargain power will come down. Low.
Price sensitivity is dash in product which are used along with the asset previously bought. A, high, B, low, C, moderate, D, none of the above.
Low.
Low. Yes.
Categories of new product pricing includes A, revolutionary product, B, evolutionary product, C, me too product, D, all of the above. All of the above.
The evolutionary meat. Therefore, all of the above.
A product is said to be dash when it is new for the market and has a potential to create its own value. A, revolutionary product, B, evolutionary product, C, me too product, D, all of the above.
New to the market. Yeah.
Revolutionary product.
Revolutionary. Am I right?
Yes.
Revolution is the new one. Next.
A product introduced upgraded version with few additional characteristics are A, revolutionary product, B, evolutionary product, C, me too, D, all of the above.
Product
Evolutionary.
related.
Evolutionary.
Evolutionary. Huh?
Yeah.
Evolution.
Price adjustment policies are distributors discount, quality discount, cash discount, all of the above.
All.
Distributor.
All of the above.
Quantity, not quality. Yeah. Quantity discount. Kindly make a correction. Quantity discount. The answer is
All of the above.
all of the above. Next.
These discounts are price reduction based on promptness of payment. Distributors discount, quantity discount, cash discount, all of the above.
Cash discount.
Cash
Cash
discount
discount.
comes under one. Prompt payment.
Total cost rupees 3 lakhs. Sales quantity 40,000. Investment rupees 3 lakh. Tax at 30%. Required rate of return on investment is 20%. Fine selling price.
Yes. Total required rate of investment is required rate of return on investment 20%. Okay. You have to find selling price.
Selling price.
Yes. Sales quantity 40,000 rupees, not rupees, 40,000 quantity. Okay. Now kindly make a note. Sales quantity is equal to 40,000. We have to compute. Sales quantity is equal to 40,000. Selling price X, that is what you are going to compute, X. Therefore, sales revenue is equal to 40,000 X. Less total cost 3 lakhs. Balance equal to profit before tax 40,000 X minus 3 lakhs. Am I right? Less tax 30%. Balance equal to profit after tax, that is 70% on 40,000 X and 70% on 30 lakhs. So how much can I?
So just 40.
20. How much profit?
12,000 X minus 90,000.
Profit after tax comes to
28,000 X.
28,000 X minus
2,10,000.
okay, 2,10,000. So next page, next line item. 28,000 X minus 2,10,000 is equal to, should equal to
3 lakh into
3
20.
lakhs into 20%. Yes. 3 lakhs into 20%. So find X.
$9.64.
9.64 upper.
Yes, sir.
All of you got it, 9.64.
Yes, sir.
Good. Next question, Bas.
Annual production 20,000 units. Total cost rupees 2,20,000. Investment rupees 2 lakh. Tax rate 52% based on the information. Match the situation and price.
Okay. We have to work out. Right? Required rate of neutron is 20%. Same manner. First situation. Put it down. Sales revenue 20,000 X. Selling quantity 20,000 is there. 20,000 into X, 20,000 X. Less cost 2,20,000. Balance is equal to profit before tax 20,000 X minus 2,20,000. Less tax 52%. Balance equal to earnings after tax. 48% on 20,000 X comes to how much? Remaining percent we can apply. Okay. 48% on 20,000 X is equal to
9,600 X.
9,600 X minus same manner 48% on 2,20,000 is equal to
1,05,600.
1,05,600. That should equal to 20% on 2 lakhs. Am I right? So find the X now. Find the X.
15.16.
15.16.
15.16.
0.17.
17. Okay. Answer for the first one, 20%, 15.17. Similarly, second case, 9,600 X minus 105,600 should equal to 30% on 2,20,000. Am I right? total cost is சொல்லிருக்காங்க. So find X.
$17.86.
17.25.
25 or 86 upon.
17.87.
So 30% on 2,20,000 or 2 lakh, sir.
என்ன
2
சொல்லிருக்காங்க?
lakh 20.
Total cost தான சொல்லிருக்காங்க. 2,20,000 ல 30%.
17.86.
Next, same manner. 9,600x minus 105,600 should equal to 20% on 20,000 x. Because sales revenue 20,000 x. Understood? Next, got it or not?
$18.86.
Sure.
18.8.
Yes, sir.
18.8. Next, 50% markup value added by the manufacturer. Therefore, 9,600x minus 105,600 should equal to
Sir,
yes or no?
in the third one, 20% profit on sale.
No.
So we will take 20% on which amount?
20,000 x. Sales quantity 20,000.
Okay, okay.
So, what about the last one?
So 50% on which means
Value added by the manufacturer. All right.
yes.
Value added means they're supposed to give the raw material. Then only validation is possible. All right. So, they are not going the raw material. You have to assume any raw material. Then only can identify. So, obviously, last one A may be the answer. Understood?
Balance.
Balance. Balance which is not supposed to take, but information is inadequate. We are leaving as it is. Value addition means how to find out 9,600x minus 105,600 should equal to 50% on 2,20,000 minus raw material cost. Other than raw material cost is a value addition. Understood? So they're supposed to be the raw material, then only you can complete. So even then we can complete. So what is the answer? A. Right? Yeah. A is the answer. Understood logic or not? Validation means total cost minus raw material cost is equal to validation. Like the next one.
What are the disadvantages of total cost based pricing for products?
Total cost.
Statement 1 does not consider if the customer is willing to pay as per value of product. Statement 2 requires budgeting of production output volume to determine allocation of overheads. This may not always be accurate.
Correct.
Statement 3 surplus generated from sales cannot completely cover the replacement cost of the fixed assets in an inflationary economic condition.
Okay.
Statement 4 pricing using this method is difficult to arrive at due to lack of information.
No, this may not be correct. Upper 1, 2, and 3 is the correct one. Am I right? Because in it's based on total cost. That is easy for us to identify. Therefore, what is the answer?
Option B.
B is the correct answer. So I'm going to benchmark for fixing the price mere based on cost. These are all the advantage. First 3 is the advantage. 1, 2, and 3 is that. Disadvantage.
In which stage of product life cycle will you use going rate pricing? Option A, introduction, B, growth, C, maturity, D, decline.
A.
Growth.
Maturity. In the maturity stage, many competition will be there. Therefore, for the purpose of sustainability or survival, we can fix going rate. Introduction stage, either competition is high, mean we are going to charge the least cost, therefore penetrating pricing. New product mean we may going to skimming pricing policy. Am I right? Next.
Which of the following is not a feature of price discrimination? Option A. The market must be capable of being segmented based on customer, product, place, or time. B. The customer should not be able to resell the product at another segment for a higher price. Option C. Pricing the product below cost, lower as may be determined by regulations to reduce or eliminate competition. Option D. The chance of competition underselling in the segment of higher prices should not be possible.
So A, B, and D is the correct. Therefore, the feature not include they ask. Therefore, C is not form part of the features of price discrimination. Next.
Starlink is a global mobile sir. Screen. Okay, sir. Starlink is a global mobile phone manufacturer. The company introduces new models of the phone at least once a year. These models are either innovative in their capabilities or have appealing design. The company invests a lot in research and development, sales promotion and advertisement, and product distribution. Hence, its production is capital intensive and the cost of production is high. There is a huge demand whenever Starlink introduces a new model in the market. Over a time period of a year, the demand gradually slows down. What type of pricing can Starlink adopt to gain maximum profitability during every model launch? Option A, going rate pricing. B, price skimming. C, predatory pricing. D, cost-based pricing.
Price skimming.
Yes. Innovative product, huge demand is there. Therefore, over the period after the competition comes only, price may going to reduce. Therefore, early stage we have to earn more profit. So we can better to fix skimming pricing policy. High price we have to fix. Understood? Next. What are the next one? Able to follow or not?
Mimosa is a luxury hotel chain operating out of many tourist destinations, one of which is in a forest area in Uttarakhand. In the last few years, due to severe drought condition, the forest ecology got affected. Due to this, tourism reduced to a trickle. Most hotels in that area cut their prices to very low rates in each of these years in order to attract the guests with low price. Instead, the manager at Mimosa offered guests free pickup and drop to the airport, railway station, discounted spa services, fast internet connectivity, certain complimentary gifts to attract customers. At the same time, it maintained its pricing at luxury room rate levels charged earlier when the tourist season was normal. Which pricing did the manager of Mimosa follow? Going rate pricing, market pricing, value-based pricing, skimming pricing.
Value-based pricing.
Value-based pricing. In this circumstance, either they may reduce the price to reach the order, pick the retain the competition, or what is going on in the market also you can fix. Or instead of that, we can charge the same price or premium price, but to attract the customer, we may going to provide extra services. Many tourist places and all, if you see, even tier 2 cities and also, whenever go for the class, if I'm going to book the room, they'll tell pick up, we will come to the station or airport, sir. They'll send the cab itself. So we may thought what the 200 rupees or 500 rupees savings in what cab is there. Or location you may not have from railway station to our airport to reach the hotel. They are helping. So whenever I go, I may prefer what that particular hotel is best. I may recommend my friends also. Right? They will take care of everything. So indirectly, they are going to capture by way of 200 to 500 rupees. They are going to capture psychologically. We may attach with that particular hotel itself. Understood? So similarly, discounted spa, some extra facility they are providing. Nowadays, many resorts and all now doing the value-based pricing. Am I right? In resorts, not mere swimming pool alone, playground is there, somewhat activity, extra activity for kids. So many things inside they are having it. Am I right or not? That and all want value-based pricing to attract the customer. Next.
Yes Limited is engaged in manufacturing activities. It has received a request from one of its important customers to supply a product which will require conversion of material M, which is a non-moving item. The following details are available. Book value of material M rupees 60, realizable value of material M 80, replacement cost of material M 100. It is estimated that conversion of 1 unit of M into 1 unit of finished product will require 1 labor hour. At present, labor is paid at the rate of rupees 20 per hour. Other costs are as follows. Out-of-pocket expenses 30 per unit, allocated overheads 10 per unit. The labor will be redeployed from other activities. It is estimated that the temporary redeployment will not result in loss of contribution. The employees to be redeployed are permanent employees of the company. The minimum price in rupees to be charged for the customer so that the company is not worse off by executing the order is dash.
Okay. Now, first of all, it's a non-moving item. Am I right? In case of non-moving item, book value is not relevant. We are not going to replace because this is a non-moving. Right? We are not going to repurchase. That is also not relevant. So one and only relevant cost is what? If I am going to sell, then 80 rupees I can get. That's a relevant cost. Right? Then I may going to use this particular product for some other purpose. For that, I need one labor. For labor, 1 hour I have to spend, per hour rate is 20. But labor is what? Not having any contribution loss, permanent labor. Whether I'm going to use this activity for using this activity or not, the labor cost is a committed cost for us. Right? Therefore, labor cost also relevant for decision making. Other two costs given, out of pocket cost, allocated cost. Allocated cost, irrelevant cost because going concern policy, company is going on. Whether I am going to accept the offer or not, I have to incur the fixed cost. Therefore, allocated cost not relevant. Only extra expenses out of pocket cost is relevant. Therefore, two costs only relevant out of the entire statement because of the non-moving item. One is resale value, nothing but realizable value. Another one is out of pocket cost. 80 rupees plus 30 rupees is equal to
110.
110 is a relevant cost. Understood? Kana? Understood, Kana?
Yes.
The cost of production and sales of 80,000 units per annum of product Q are material 4,80,000, variable overhead 3,20,000, labor 1,60,000, fixed overhead 5 lakh. The fixed portion of capital employed is rupees 12 lakh and the varying portion is 50% of sales turnover. The selling price per unit to earn a return of 12% net on capital employed, net of tax rate at 40% is dash.
So required selling price is 12% on capital employed. Am I right? Now, note it down. Required selling price is equal to 12% of fixed capital employed plus variable capital employed. Fixed capital employed plus variable capital employed. Next line item, that is 12% of 12 lakh plus 50% of 80,000 X. Sales quantity 80,000 into X, that price you are going to compute. Okay, Hana? Therefore, 50% of 80,000 X. that is equal to 12 lakh into how much percentage? 12 percentage plus 40,000 x. Am I right? 40,000 x into 12 percentage. Are you able to follow? So how much gonna record profit, record selling price?
1,44,000 plus 40,000 x.
That we have to match. Am I right? This is one side of the equation. Are you able to follow? Hello?
Sir,
Yes, sir.
4,800 x, sir. 1,44,000 plus 4,800 x. Sir, 12% of 12 lakhs plus 40,000 x done.
40,000 into 12%.
Yes, 40,000 x. Correct only. Yes.
4,800. Okay.
1,44,000 plus 4,800.
4,800 x.
Okay, that's the one side of the equation. All of you got it, Ragapriya, got it?
Yes, sir.
Okay, shall I proceed, sir? Ramana sir, able to follow? Yes. Next, with respect to profitability statement, sales revenue 80,000 x. Sales revenue 80,000 x. Less total cost 4 lakh 80 plus 3 lakh 20 plus 1 lakh 60 plus 5 lakhs. Balance is equal to earnings before tax. Balance is equal to earnings before tax. 80,000 x minus the total cost. Less tax at the rate of 50%. Right? Not tax at the rate of 40%. 40%. Balance equal to earnings after tax. 60% of before tax income. So 60% of 80,000 x and 60% of total cost. Okay, Vishnu? How much earnings after tax?
48,000 x minus 8,76,000.
That we have to match with the previous equation. That should be equal to 12% on net capital employed. Find the x. X is equal to how much?
23.61.
All of you got it?
23.61.
Then D is the answer. Interesting or not? Varun got it or not?
Yes, sir. 23.6.
So the left hand side is equal to right hand side. It has to match. Total cost, that is what earnings after tax should equal to our record rate of return, 12% on net capital employed, that is equal to 23.61. Is that correct? Then we have to match the pricing policy.
With the scenario in the following cases. Customized product, perfect competition, defense contract work, infrastructure projects, pharma companies, oligopolistic market with few players. Match it with going rate pricing, seal bid pricing, cost-based pricing, collusion pricing.
Okay. Find out. In case of perfect competition, easy.
1C.
Going
rate. Am I right? Customized.
1C.
C adagana.
Yes, sir. Defense seal bid.
Defense Infrastructure
Sealed bid.
contract, therefore sealed bid. Therefore, what is the right answer?
Option A.
A.
Next.
Which of the following is not a drawback of cost-based pricing approach? Option A, there is no
Not a
incentive for
drawback.
managers.
Yeah, not a drawback. Okay.
There is no incentive for managers to operate in a cost-efficient way. The pricing method does not consider the customer's value perception about the product. C, it ignores the structure of market in which the firm operates. D, it requires market research to understand competitor strategy.
So, what is the right answer? It requires to research, understand the competitor strategy. D is the correct answer. Not a drawback. Next.
Match the price discount with their characteristics.
Hmm.
Distributors discount, quantity discount, cash discount, trade in allowance or promotional allowance. Match it with useful in trade where credit risk is high. Create different prices to different customers on the basis of marketing functions performed by them. C, channel partners are encouraged to promote company's product, incentive to push a product to customer. D, practicable where the commodities are homogeneous or identical in nature or where they may be measured in terms of truckloads or measured in physical units.
Okay. First, distributors discount. Comes under
B, sir.
create different price at different customer on the basis of the function. Yes. For one B. Quantity discount.
Option
D.
D.
D adagana.
D, sir.
Yes.
Identical nature.
D.
Truckloads.
Pretty practical where the commodity is homogeneous identical nature where related to none of the machine. Physical unit. Yes. D. Cash discount.
A.
A.
Where the risk is high. A adagana.
Yes, sir.
Yes, only A, B, C, D.
Course.
A, sir.
Yes, sir. Trade discount. Trade, okay, balance on that. Channel partners were promote the promotion. So, for the answer, A is the answer.
A.
Okay. Next.
Categorize the services based on the nature of service involved. Fitness center, warehousing, advertising, knowledge processing offices. Match it with product or possession processing service, mental stimulus processing service, people processing service, information processing service.
Okay. Fitness center, people processing, right? Warehousing for product.
Product position process.
Advertising.
Mental stimulus.
Mental stimulus. Huh? And KPO information. Yes.
Option D.
D is correct.
Mr. YEE is a management accountant for not a profit organization that provides subsidized homes for the lower income groups of the society. He is in charge of finance, budget, and MIS reporting at this organization. In the course of his work, he comes to know that the construction of home is being done with substandard material in order to keep the cost within the budgets. Which of the following is true? Option A. The use of substandard material in construction is not a relevance since it is outside the domain of management accounting.
Not
B.
weak on
The
demand,
use of
right?
substandard material is relevant since it does affect the customer service quality the beneficiaries from the lower income groups whose service is the main objective of not for profit organization. This
Correct.
is a non-financial consideration in MIS report.
Correct.
Option C. The information can be ignored because it does not impact the budgets adversely.
No.
Option D. The use of substandard material in construction will not have a long-term consequences to the organization.
So, what is the right answer? B is the correct answer. Non-cost factor you have to consider. It will affect the quality. Are you able to follow?
OOL has developed a new product which is about to be launched into the market. The variable cost of selling the product is rupees 17 per unit. The marketing department has estimated that a sale price of rupees 25, annual demand would be 10,000 units. However, if the sale price is set above rupees 25, sales demand would fall by 500 units for each 0.5 increase above 25 rupees. Similarly, if the price is below rupees 25, demand would increase by 500 units for each 0.5 stepped reduction in the price below rupees 25.
Okay.
The price in rupees 25 and corresponding quantities in units, which would maximize OOL's profit in the next year.
Okay. Now, currently, how much is selling price?
25.
Okay, note it down. Selling price 25. Sales quantity currently 10,000. Am I right? Are you with me?
Yes, sir.
Variable cost 17. Am I right? The next column, selling price column 25.5.
ஆமா சின்ன சின்னதா பாப்பா அது என்ன கேட்டுட்டு இருக்கீங்க
25.5. Each and every 50 paise only. Am I right? Therefore, sales demand comes to
9,500.
9,500. Variable cost, same 17. Contribution per unit, how much then? Selling price minus variable cost equal to contribution comes to
8.5.
how much gonna 25.5 minus 17
8.5.
8.5.
into the sales quantity is equal to 9,500 or 8,500, 9,500.
9,500.
Selling price decrease. Okay, 9,500 is equal to
80,000.
80,750.
okay, it's a first contribution. Next level 25.5 become 26. Sales quantity become 9,000. Am I right? Hello?
Yes, sir.
Yes, sir.
Therefore, total contribution how much? 26 minus 17 into 9,000.
81,000.
81,000.
Next 26.5. Then quantity become
8,000.
8,500.
8,500 or 8,000 gonna.
8,500.
8,500.
Okay.
9.5. So what is the contribution, sir?
Selling price minus variable cost of 17 rupees.
Sir, contribution again 80,750.
750.
So they are given the probability 26, 26.5, 25.5. Leah, the lady match are the par.
Option A.
Option A. There we are getting maximum profit. Other thing,
81,000.
there's level quantity itself not matching. Am I right? Only in case of 26, quantity also matching. There we'll get the maximum profit based on the given info available trial. Are you with me? So this type of questions, we can take the price, what is given in this what chart, it's in the options itself. And the price ke edu match ஆகுது, எது maximum price profit வருதுன்னு பார்த்தா போதும். Okay, Shruti. Next.
A Singaporean company manufactures product A, B, C. They are joint products. C has no realizable value unless it is processed further after the point of separation. The cost details are as follows.
Okay.
Cost up to the point of separation per unit is 80. Processing after separation, additional marginal cost per unit is 80. Additional fixed cost per unit is 20. Product C can be sold for $150 per unit and no more. Should product C be further processed?
Okay.
Option A, yes, because each unit of product C sold contributes $50 per unit towards recovery of joint cost. B, yes, because each unit of product C sold contributes $70 per unit towards recovery of joint cost. C, no, because each unit of product C.
Okay. It's a what type of product? Joint product.
Joint product.
With respect to joint product, commonly we are going to produce more than one product, A, B, and C. Am I right? Therefore,
Yes, sir.
up to the point of separation, it's become irrelevant cost because incurred for all the product as a whole, common cost. Am I right? After the split off point, only if I am going to do further process, I have to incur. Am I right? Otherwise, I don't need to incur. So the further processing costs are relevant costs for us. After doing further processing, the selling price is 150. So 150 is a selling price. 80 plus 20, 100 is a cost. Therefore, how much the profit on further selling, further processing? We'll get 50 rupees the contribution. Am I right? So A is the correct answer. Understood? Kana, understood, Kana?
Yes.
Next.
An airline company had to ground 25% its fleet operations. This was due to low passenger traffic due to economic recession. The company has started incurring losses because of this. The management has convened to decide whether to temporarily shut down operations for few months until there is a spike in air travel. Pilots of the company are highly skilled and lot of investment has been made in training them. Hence, they will continue to be part of the workforce and their regular salary will be paid each month. Ground staffs are
The regular
lesser
salary will
skilled.
be paid each month. Am I right? Labor costs are committed cost. Understood.
Ground staffs are lesser skilled. The job market can provide the requisite candidates when the company plans to rehire once the normal operations begin. Hence, the company has decided to retrench 30% of its ground staffs. They will be paid retrenchment compensation of 2 months' salary. Planes that have been grounded need to be maintained continuously in order to be capable of being put into operations when normal operations resume.
Okay.
Due to the nature of the engine, special maintenance cost will need to be incurred in addition to regular maintenance cost in order to keep it in working conditions. Planes will continue to be parked at the airport hangar, for which the company will pay fees. Which of the following will be relevant items to be considered while deciding on the scenario of this temporary shutdown?
Okay.
Statement
Temporary
1.
shutdown, what and all
Salary.
cost. Am I right? Simple story. So temporarily they want to shut down. If they are going to shut down, what and all relevant for the purpose of decision making, that only have to take. Okay. So whether I am going to shut down or not, if I am going to incur the cost, it will become irrelevant cost for decision making. Are you able to follow the story? All of you?
Yes, sir.
For the first one?
Statement. Salary paid to pilots for the period when the planes are grounded. Savings of salary.
Relevant or relevant?
Irrelevant.
Irrelevant. Because it's a committed cost.
Savings of salary cost of 30% of ground staff who have been let go.
then it's a relevant cost, right? Only if the shutdown happen, I can save 30%. Therefore, relevant for decision making. Next.
Retrenchment compensation of 2 months' salary paid to the ground staff who have been let go.
So one is saving, another is cost because of temporary shutdown. Therefore, it's become relevant cost. If the shutdown is not happened, these two costs may not going to incur. Right? The retrenchment cost may not going to incur. Next.
Special maintenance cost to ensure that engines of the grounded fleet remain in working condition.
So they said it's an additional cost. Right? Therefore, relevant cost.
Airport hangar parking fees.
Airport hangar parking fees, irrelevant. Why? Whether plane is running or not, we have to pay the cost. Right? We have to park it. So what are all the relevant costs for us? 2, 3,
2, 3, 4.
What's the relevant cost? Understood? Varun, read that.
Yes, sir.
Next.
Match the pricing strategy and explanations. Customary pricing, skimming, penetration pricing, psychological pricing, explanations, ending price with 99, pricing
Ending
a
price
product
with 99 is called what? The beta pricing is called psychological. Psychologically, it's less than
psychological pricing.
Psychological pricing. Okay.
Pricing a product based on perceived expectation of customers.
Pricing the product based on perceived expectation of the customer.
Skimming price.
Perceived expectation. Customary pricing. Next.
Setting a high price which gradually reduces a competitors enter the market.
Then
setting a high
Skimming.
price which gradually reduces a
Right.
competitors enter the market.
Yes. The last two very easy. Low price means penetrating.
Low price.
So what is the right answer?
Option C.
Option B.
C is the correct answer. Next.
In a product mix decision, which is the most important factor to In a product mix decision, which is the most important factor to consider in order to try to maximize profit? Option A, contribution per unit of a scarce resource used to make the product. Option B, contribution per unit of the product. C, profit per unit of a scarce resources used to make the product. D, profit per unit of the product.
For the right answer, contribution per key factor, nothing but contribution for scarce. Already we did similar question, right? Contribution per key factor question.
Modern Gas Limited deals in liquid nitrogen, a standardized product. NGL pay less attention to its own cost or demand and base its price largely on competitors' prices. The pricing method adopted by NGL is
based on competitors' pricing.
Going rate
pricing. Going on in the market, you are going to fix. Good.
DM Mart is a retail chain. Competition is stiff and revolve around the price among the market player in retail chain segment. DM Mart adopted the practice of pricing some of its products below cost with an intention to destroying the competitor. Such pricing practice or strategy is referred to as dash. Loss leader pricing, predatory pricing, price discrimination, penetrating pricing.
Predatory pricing.
Policy of predatory pricing. Understood?
Yes, sir.
Good. So enjoyed the chapter? Good. Once if you understood the theory part, the class notes, easy for you to address. Right? In case studies questions also nowadays they are asking, case list based. They'll combine together the story. You have to identify for A for what, B for what, C for what. Even computation also will be there. Concept based questions also will be there. Okay, what type of pricings also will be there. Or more than one product will be there. You have to identify, match the pricing policy. Clear? Or what is relevant, what is not relevant. Like that they can frame the story. So ultimately, you should be strong in the concept. Theory strong or you can address. Enjoyed the session?
Yes, sir.